Alright, so welcome to part 2 of this video where I show you how I scan for high momentum stock trades on a daily basis. So again, if you've not catch part 1, please pause this video and go watch part 1. So in part 1, I talked about what I look for in momentum trend trades. So the first thing is I only trade stocks with high relative strength. So these are the strongest stocks in the market. I only trade the top 15% of strongest stocks in the market, which have a relative strength rating of 85 and above. The second thing is I only enter stocks for a trend trade when the moving averages are in sequence. Again, when the 20 EMA is above the 40 EMA, and when the 50 simple moving average is above the 150 simple moving average and is above the 200 simple moving average, that gives you a very strong trend. And there's a very high probability the price will continue moving in the direction of the trend. So we call this a high probability trade entry. And again, when do we actually enter these trades? We enter based on 4 entry points, right? The trend retracement entry, which I covered in the first part of the video, the breakout from base consolidation entry, the breakout within base entry, and the explosive flag breakout. So what I do every day is I look for one of these 4 patterns. So again, in the first part of the video, I showed you an example of how I identify and how I would place my orders to buy and to take profit and to place my stop loss for ENPH. That was the first stock that we looked at. Now, there are a couple more. I would like to show you what came up today. Again, like I said, every day when I screen for trades, I don't find a trade every day. So on certain days, if I don't find a trade, I don't trade. Never force a trade. Only trade when all the stars are aligned, when you've got a trade setup that meets all the high probability criteria, where all the stars are aligned, then you get a very good edge in the markets. All right, so what other setups can we look at now? Let me show you one, ADP. Now this one, as you can see, it already has gone up, right? So you can see that this was a setup here. This was the breakout candle, right? So this was the entry point and catching the stock up. So can you recognize what setup this is? What setup is this? This is a breakout within base setup. I can check this out. Yep, this is breakout within base setup. Let me make it a bit bigger. There we are. All right, so we have got that prior uptrend. We have got this base, and then we have got that high pullback, buy on the breakout when the 20 crosses above the 40. So that's a breakout within base setup. So this was actually entered a couple of days ago, and this trade is an ongoing trade. So again, how do you find all these trade setups? You scan the markets. Now, as one person, you may miss out certain trades, and that's why what's really powerful in the Piranha Profits stock trading community, something wrong with my mouth today, right? In the Piranha Profits stock trading community, is that we help each other to find trades, and we post trade setups in the community so that everyone helps each other to find these trades. And right now we have migrated our community to Discord. So I used to be on Telegram. I'm no longer on Telegram. I'm on Discord. And for example, this is our stock trading group. If you type ADP over here, you can see that, yep, it was posted by me a couple of days ago on the 11th of November, right? ADP has a nice breakout within base setup. Okay, so you can see over there, breakout within base setup. And I said, hey, I'm going to place a buy limit order, 50% of the retracement of the candle, right? So that was actually called on the 11th of November. And we call out these trades every day when we do find these trade setups. So this was a very nice trade that most of us, we are in this trade right now. Breakout within base setup. Let's see what other trades I can highlight that came up today. Okay, hey, HAE, this is another trade that we took in our community. Can you recognize what trade setup this is? This is not a breakout within base setup. This is actually a trend retracement setup, right? This pattern over here, check it out. It is this exact pattern where the price is bouncing off one of the key moving averages and bouncing off a strong level of support. So you can see there, HAE. Okay, you can see bouncing off the 50, bouncing off the 50, bouncing off the 50, and we've got a bullish engulfing pattern appearing at a strong horizontal support. So we've got a confluence of support, moving average and horizontal support, double confluence. That was a buy, taking trade up, right? So again, this was posted on our chat group, and this was actually not found by me. This was found by one of our other traders in the community. So I don't find all the trades. Sometimes I miss them out, and sometimes someone else finds them. Like, let me show you HAE. Right, yeah. So this was posted by Richard, who is one of our traders in the community. He's a trend retracement setup on HAE, 50 moving average support, trendline support. Great entry on that one as well. Again, will they all be winning trades? Of course not. You can't win all the time, right? But you take great trade setups, you're gonna win more than you lose, you know, and your average win will be more than your average loss. That's how you make a profit. You know, like I said, trading is like a business. In any kind of business, you've got sales, revenue, minus cost equals to net profit. You can't say in a business, I only want sales, I don't want cost. It doesn't make sense. So similarly, in swing trading, you can't say I only want wins. I don't want losses. It doesn't work that way. You're going to have winning trades and losing trades. So winning trade is like revenue. Losing trade is like a cost. So even if you have a 50% win rate, every revenue as a cost, you get a very good net profit, right? But of course, we win a lot more than 50%, okay? So that was HAE trend retracement setup. This was another one, MLI. Can you see what pattern this is? Breakout within base. That's right. It's the uptrend here. We've got a nice base, hits resistance, and breaks out from the base going up. So again, this setup was posted on our chat group, right? Almost every setup that's great is posted on our chat group every day. And again, you have to enroll in our stock trading course to get access to all our communities. And again, it's a lifetime access. That once you're in a community, it is for life. There's no subscription you have to pay every month or every year, right? Although we may do that next year. Next year, we may start this a monthly subscription next year, right? But for this year, if you enroll into any of our courses, it's a lifetime. Only for now, lifetime access for enrollments this year. So great reason to enroll this year, right? So MLI, you can see was posted by, yours truly. I posted this on the 11th of November. Again, breakout within base on MLI, set up over there as well. So I found this sucker, right? So I found this sucker, got in here. Now it's making its way up, right? So again, you find these trades as you look through this list of high momentum setups. Now let me show you one that I may enter today, okay? Besides ENPH that we saw in the first video, another one that came up is HRB, okay? And I may take this trade today. I'm still deciding, okay? Because, you know, my rule is I don't take more than 2 trades a day. So if I find like 3 trades, I choose the best 2. If I find only 1 trade, I just take 1 trade, right? Okay. So look at HRB and check this out. What setup is this? This is a breakout within base setup, okay? So again, check this out. We've got that strong uptrend. We've got this base. Now this base is a bit unique. It is a base that comes with a double bottom, right? We call it a double bottom base. And double bottom bases tend to be pretty powerful, all right? Okay, so right now it formed a resistance here, and it just broke out of this resistance, okay? Now, I actually mentioned this during my live webinar that I did not take this trade initially on this breakout candle, okay? Why? Because the 20 EMA had not crossed above the 40 EMA, so it was against the entry rule. But now, as of yesterday, we've got another bullish candle there, and the 20 moving average just crossed the 40 moving average. So it is now a valid trade to take. So today, I may be taking this trade, right? So, okay. So again, I'm going to show you how I place my buy order, how I put my stop loss, how I put my profit targets. A reminder that all my courses and playbooks are going for up to 75% off during this very limited black market sale, during this black market event. So you can catch all my courses. You can go to piranhaprofits.com, check out all the courses. For example, the options trading mastery package, the price action manipulation package where you learn how market makers manipulate the markets and how do you trade alongside these bastard manipulators, right? Options mastery package, how do you trade options like a pro? And of course, the stock mastery package where you learn in depth how I look for high probability trade setups every single day with all our softwares, with all our scanners. As of course, together with our value momentum investing course package as well. So do grab your favorite courses right now. So again, where do I put my buy order? So I only want to enter the trade if the price continues going up today. Right? If the price continues going up, I want to get in this trade. Okay. So what I could do is I could put a buy order. Okay. Just a few cents above the high of this candle or the close of the candle. You know? If they're pretty close, I just put it above the high. Okay, that's fine as well. So what's the high of this candle? Sometimes if the high is far above the close, I'll put it above the close. So it's flexible. Okay. So the high of this candle you can see is 43.28. Right, 43.28. That's the high. So I'm going to put it about 3 cents above the high. 43.28 plus 3 cents is 43.31. So let me open up my 43.31. Okay, so that's my entry price. This is a breakout within base. This is a long setup. This is HRB. This is the 23rd of November. This is the 9th trade of the month. Right, you can see I've entered a couple of trades this month, and one trade I got out break even, all right, because I moved my stop loss to entry and it hit my stop loss last night. I got out at break even, so that's a break even trade. The rest of the trades are still open, right? They are open trades right now. So where do I put my stop loss? Again, stop loss, I always put my stop loss roughly 1 ATR, average true range, below the entry price. Okay, so if I'm buying here, somewhere here, if this is my entry price, roughly about there. Okay, it's not exact, I'm just drawing this just to demonstrate. So roughly I'm going to enter somewhere there. That's my entry, my buy price, right? So my stop loss, 1.5 ATR. Now what's the ATR right now? The current ATR is $1.21. Let me write this down. The current ATR is $1.21. Now what does ATR mean? It's the average range of the candles or the average daily volatility. So I want to put my stop loss further than the average range of the candles. So roughly I take 1.5 ATR. What do I get? 1.21 times 1.5, I get 1.82. Okay, 1.82, $1.82. So my stop loss would be $1.82 below the entry price. Let's get back to this. Okay, so 43.31 minus $1.82. My stop loss would be at $41.49. Boom. Okay, that's my stop loss. Now, let me look at the charts and ensure that it looks like a reasonable place to put a stop loss. It has to look reasonable. 41.49. So where would my stop loss be? My stop loss would be somewhere 41.49. Roughly somewhere there. Yeah, roughly my stop loss would be somewhere here, below this previous resistance, right? So if it comes back down, it's going to hit this resistance that will become support. All right. Now, you know what? I decided to change my mind. You know, sometimes when you look at the trade, you find that, okay, if the breakout candle is a bit far from the resistance, you know what? I'm going to change my buy order. I'm going to put my buy order lower here. So I'm going to wait for a bit of a retracement to get in. Sometimes you can do that as a trader, where instead of using a buy stop limit order, buying higher, you could use a buy limit order, hoping the price would retrace slightly and you get filled at a slightly lower price. So I'm going to do that. I'm going to do that instead. So I'm going to put my buy order somewhere halfway at the halfway mark of this candle, roughly. All right, so my buy order, you know, I tell you what, I'm going to put my buy order at about 42.85. Okay, because it looks like it's gone up a bit too far from the resistance. So 42.85, changed my mind. Okay, so comes with experience to do this. 42.85. Okay, fine. 42.85 would be my new buy price. I'm going to buy lower. Stop loss, same thing. Stop loss would be sorry, I forgot. 121 times 1.5. What's that again? 121 times 1.5. Yep, 182. Correct. So stop loss would be 182 below my entry price. My new stop loss would be 41.03. Okay, I feel better with this stop loss at 41.03 because it is further below the support resistance that gives me more buffer that I won't get stopped out that easily. So new stop loss at 41.03. Okay, 41.03. That'll be somewhere there. Okay, cool. So I'm gonna buy at this level, right? And I could put a stop loss over here. Cool. Now that looks like a not bad trade because by putting the stop loss here, the stop loss is below all these moving averages and below this support. So it's well protected. It's going to be hard to hit my stop loss in this case. All right. So what is my 1 hour distance? 1 hour represents the risk per share, right? So the 1 hour distance is 182 in this case, right? So this is 1 hour. 1 hour is the difference between the buy point and the stop loss. And my 1 hour distance is 182. Okay. So if I'm risking 1 hour, I want to make ideally 2 hour. Risk $1 to make $2. Risk 1% to make 2%, right? So my profit target will be at 46.49. And that will be somewhere 46.49. There'll be somewhere there, roughly 46.40. Yeah, roughly. I'm just drawing to show you visually where the profit target is. Okay, there we are. So let me expand this chart right now. So again, just to explain visually what's happening, right? So my buy order is here. It's going to be a buy limit order. So when the market opens today, if the price can retrace down to my buy order, I'll get filled. Now, if the price just flies up, then I won't get filled, right? So that's the risk I'm taking. It may go off without me, okay? But I won't chase it, right? Then stop loss is over here. This is my 1 hour distance, which is 182. And this is my 2 hour profit target. So I'm going to take profit somewhere here at about 46.49 over there, okay? So usually what I do is that I could just, once I'm in the trade, I just let it hit my profit target to take profit or hit my stop loss and I get stopped out. If a losing trade, I either make 2 hour win or I lose 1 hour. Now, I do have some other exit rules as well, which I teach in the stock trading course where I may sometimes get out even before hitting the profit target if I see signs that the price is weakening, right? Or sometimes if I find the market is not that strong, I may sell half my position, take half profits at about 1.5 hour and sell the other half at 2 hours. So I'm flexible in that way depending on the market situation. Okay, great. So these are how I determine my entry, stop loss, and profit targets. As I mentioned on my first part of the video, your entry and exit strategy is only one part. The second part is again position sizing, calculating the number of shares to buy. So you only risk a small percentage of your capital. So in a losing trade, you only lose 1%, right? But in a winning trade, you win 2%. So let's go to the position sizing calculator to calculate the number of shares to buy. So again, it all depends on your account size. So in your account, how much do you have to trade with, your trading capital? So again, let's imagine it's $10,000. Could be anything, could be 1,000, could be 5,000, could be 10 million, doesn't matter, right? I'm gonna risk 1%. So what's 1% of 10,000? $100, right? So in other words, the most I can lose is $100 for any trade I take, which is 1% of my total capital. Okay. So what's my entry price? My entry price, let's go back to this. Check it out. 42.85 is my entry price. My stop loss price is 41.03. And again, that gives me a profit target of 46.49, right? It pre-calculates everything for you. So it tells you how many shares do you buy for this trade. You will buy 54.95 shares. So round it up, 55 shares, all right? So this will tell you exactly how many shares to buy. So why 55 shares? Because if you buy 55 shares and if it's a losing trade, what happens? You lose $1.82, right? Because your 1 hour risk is $1.82, and so you lose $1.82 per share times 55 shares. What's that? Your loss is $100.10. Okay. Now, if it's a winning trade, you win $3.64 per share times 55 shares. You win $200. Okay, so again, $100 represents 1% of your capital. So again, you're risking 1% to make 2%. Now again, if you're more aggressive, you're more experienced, you can always risk 2%. Okay, but let's just stick with 1% right now. Now, to enter this trade, what is your position size? Your position size would be you're buying 55 shares and you're paying $42.85 per share, right? So the total size of your position is 42.85 times 55 shares. It's $2,356. This is the amount of shares you're buying. So again, is 2,356 your risk? Is this the risk you're taking? No, that's not your risk. That's your position size. Your risk is $100. All right. So always remember that your position size is not your risk. Your risk depends on the number of shares you buy and where you place your stop loss. So again, you can see visually what the trade looks like over here. We are placing a buy order below this candle. So when the market opens today, hopefully if the price can retrace slightly, I get filled at this price. Once I get into the trade, then again, it's two outcomes, right? Either it hits my profit target and I get a 2% return, or it hits my stop loss and I lose 1%. So will this definitely be a winning trade? Who knows? Okay. So again, as a trader, we can't predict exactly where the price is going to go. No one can predict because anything can happen in the markets. Our job is to find high probability trades with the highest probability of going in our direction. And we never know whether a trade will be a winning trade or whether it's going to be a losing trade, because every trade outcome is random. But what we do know is that if you take a sample of trades, if you take like 20, 50, 100 trades, you will win a lot more than you lose. And your average win will be more than your average loss. And that's all you need to achieve consistent profits as a trader. So common question people ask would be, okay, so Adam, if I risk 1% to make 2%, what kind of returns can I get in, say, a year or 6 months? Well, you can actually look at this simulator, which I have over here to give you an idea. This is a trading simulator. Okay. So first of all, you have to put in what's your expected win rate. Like I said, if you take high quality momentum trades, you can't win all the time. You can't win 100% of the time. But a good realistic win rate would be between 50 to 60% win rate, okay, on average. So let's put in a 55% win rate. And when you lose 1 R. And what is 1 R? It is 1% of your capital, or 2%, whatever, right? So in a losing trade, you lose 1 R. But sometimes the price may come down, hit your stop loss, and you lose more than 1R, because you may not get a great fill. So I'm going to put between a 1R to a 1.1R loss. Now, when it hits your profit target, you win 2R, right? Or double your risk. Again, do you always get 2R? No, sometimes you may take profit early because of some bearish exit signals, okay? So let's say your average win is between 1.5 to 2R, and you decide to risk, let's say, 1% per trade. So you can put in all these variables and you can see what to expect over a number of trades, right? Starting capital, up to you. It could be $1,000, could be 10,000, no, whatever, right? So let's put $10,000 capital, okay? Now, you can see, for example, that there's what we call simulated win rate. Can you see the simulated win rate is 69%? Now, notice that every time I put in 55%, this will change. It will change all the time, right? In this case, it drops to 45%, right? It changes all the time. Why? Let me give you an explanation. So if you have a coin, and you toss a coin, what's the probability that you're gonna get a hit, right? Now, theoretically, it is 50% chance of getting a hit, correct? But let me ask you this. If you toss this coin 100 times, and I toss the coin 100 times, and another guy tosses the coin 100 times, will we all get 50 hits? No, it's the same coin, right? Now, you could toss the coin, you may get 60 hits and 40 tails, right? I could toss the same coin and I get 40 hits and 60 tails. Another guy tosses the coin and gets 55 hits and 45 tails. Why? Because every 100 tosses is random. You may get more or less. It's not exactly 50, right? But if you toss 1,000 times, you toss 1,000,000 times, then you will get exactly 50-50 over a large sample of trades. So what this simulator does is it simulates what's your simulated win rate based on 100 random trades. See what I'm saying? So if you use a strategy that has an example of a 55% win rate, and you trade the strategy 100 times, you take 100 trades, you may actually get only 53% win rate. But if I or someone else trades the same strategy with 100 trades, they may get 57% win rate. So it's different each time, right? So that's why it's a simulation, all right? So let's assume that you get a 55% win rate. Now, if you take 100 trades, right? If you take, let's say, 20 trades a month, in 5 months, you hit 100 trades, okay? If you take 10 trades a month, then in 10 months, you finish 100 trades, okay? So depending on how many trades you take. But say on average, if you take 10 trades a month, this would represent about 10 months of trading, okay? So in 10 months, if you get a 55% win rate, what's your total return? Your total return would be 62% return, all right? Where your $10,000 would grow into $16,000, okay? And you can look at the graph over here, and you can see that it's not a straight line. Your equity curve will not go up straight. It will go through ups and downs, because you will have, short-term drawdowns along the way, right? You have got what we call drawdowns, where you could have some losing trades along the way, right? So again, if you take a look at 100 trades, again, this is just a simulation. At a 55% win rate, does it mean that you win one trade, you lose a trade, you win a trade, you lose a trade? No, doesn't happen that way. Sometimes you can get a string of winning trades and feel really smart, and you can get a string of losing trades and feel really bad. You never know when the wins and losses will come. So you can see that sometimes you could get what we call a losing streak, which is very common in trading, right? And you never know when the losing streak will come. And there are other times when you're going to have, a winning streak over there, all right? So I tell people that when you get a losing streak, for example, if you get a string of losing trades, don't be upset, okay? And don't give up. And at the same time, if you get a string of winning trades, don't be too cocky and too confident, right? The trouble with a lot of people is that after a lot of winning trades, what do? They get overconfident, they risk more, they bet even more, and then when the losing trades come, they are wiped out. And on the other hand, if some people start trading and they happen to get a losing streak, what happens? They give up, right? Or they stop trading, or they tweak their strategy, or they go and add new indicators and they go around in circles. So, and that's why I keep saying every trade outcome is random. A small sample of trades is meaningless. You can get a winning streak, a losing streak, really doesn't matter. What matters is that if you take at least 100 trades, you can see the profits roll in, right? Now, of course, even if, check this out, even if your win rate drops, let's put 50%, okay, and your win rate drops to 45%, you only win 45%, are you still making money? Yeah, you're still getting a 23% return. Your 10 grand is still growing to 12 grand. Why? Because even if you lose more than you win, but because your average win is more than your average loss, you are still profitable. All right? And you can see that, of course, you're going to have drawdowns along the way, but you will grow your capital over time. It's about thinking statistically, right? Now, if you risk 2%, for example, right, you can see that, of course, the returns get a lot more. You could get 108% return in 10 months, all right? But of course, you can see the equity curve becomes a lot more volatile, right? A lot more volatile. I don't suggest going more than 3% risk. Always start small, start with 1% risk, and manage your risk to reward ratios, right? So essentially, this is how we trade as professionals. Now, if you want to learn how to trade like a professional, you want to learn how to turn trading into a business for yourself, right? You can really learn the skills and knowledge in all our different courses. So again, reminder that we are having our black market, special black market promotion where all my courses and playbooks are going up to 75% off for a very limited period. So here's your chance to grab these offers, because once they're over, the prices will revert to their usual retailing price, right? So we've got the options trading mastery package, the price action manipulation package, the stock trading mastery package, and the value momentum investing package, as well as the currency trading package as well. So go grab your deals as soon as you can, because they won't last for very long. And again, for enrollments this year, you get a lifetime access to all the videos, all the lessons which are updated regularly, and a lifetime access to our community where we share trades every day, we chat, we encourage each other, and we help each other along this trading journey. So I look forward to seeing you in the community soon. So again, grab your offers as soon as you can.